All right, guys, we are live again. Welcome to the market update on Monday. Just want to make sure everything is working correctly. It looks like it is. All right, let me share my screen. Move this. All right, so let's look at the markets. If we look at the S&P, it looks like the overall market is down. So the S&P is down 0.32%. Dow is down 0.71%. The Nasdaq is down 0.2%. The Russell is down 1.3%. Crude oil is actually up. It looks like the only thing that's up. And then gold is down 0.60%. So it looks like the market overall is just down for the day. I did see something about the Fed may not decrease interest rates, or something about Jerome Powell holding off on cutting interest rates. So this could be the market reacting to that. I'm not sure. But yeah, it looks like the overall market is down for the day. All right, so the next tab, if you guys remember, Friday we were talking about Meta because it did a crazy run up. So it was at 394, and then Friday it went up all the way to 478, right? And I was saying Friday that I thought it would go into the 500s, and it looks like over the weekend, coming into this Monday open, it did not do that. It looks like it's at 459, so it looks like it came down a little bit over the weekend, and the market has closed, and after hours it's sitting around 459 to 460. So yeah, I was wrong about that, but I think it's still going to run up. You typically, when you have a crazy run up like that, you'll have a little dip, and then you'll have some consolidation. And if the initial pump was anything worth the stock price increasing, it typically has a second run. But I'm not sure, how far this is going to go for Meta. It might go into the 500s. It might come down from here. So who knows, right? Not financial advice, just something that I was pointing out. All right, let's get into the crypto market. So for those of you who don't know, the crypto market typically follows the stock market, and if the stock market is down, typically the crypto market is down. Now, hopefully, eventually, this is not going to be the case. And in some instances, this is not the case. Sometimes the crypto market outperforms the stock market. But most of the time, if you see the stock market going up, the crypto market's going to go up. And if the stock market is down, typically the crypto market is going to be down. And this is because the crypto market is not as mature. The total market cap, I'm looking at it right now, right here, is 1.6 trillion for the entire crypto market. So it's a very small market compared to, gold or the equities and stuff like that. So yeah. And if we just take a look at Bitcoin, let's see. All right, so Bitcoin is like, let's take a look at it overall chart. So it looks like Bitcoin is having tough resistance at 43,000. All right, and for me, I honestly think before the halving, which is going to happen in April, I think it's going to have a crash. So it may consolidate in the middle of 35, or maybe back at here where the last support held, which is around 30K. It'll be, I doubt we'll get to 30K, just because, again, the spot BTC ETFs got approved, so I don't think it's going to crash that much, but we may definitely have a correction, and then from there it might just consolidate until we get the halving. And then a few months after the halving, we'll see a price increase in Bitcoin. And then usually before that, we get a alt season, so all the altcoins typically run. So yeah, but Bitcoin's down for the day. Let's see what else. Let's look at the top gainers. on the 24-hour. All right, so the Ethereum name service is up 8%. Genesis, which I have no idea what these coins are. I've heard of ENS. I think it's basically a service on top, or a coin on top of Ethereum, that allows you to, instead of having that like big number or letter wallet address, you're able to have a naming convention for the blockchain. So that way you don't have to paste all those letters, and it's like 20 letters if you're trying to like send somebody some money. So I think that's what ENS is about. Genesis, I have no idea. Immutable X, I've heard. Okay, so this is, I think that's Twitter, right? I'm not sure. It could be. I think that is Twitter. That looks like the Twitter logo, which is called X now. Then Sui, Fractshare, Chainlink. Chainlink is actually going up. I actually invested in Chainlink a while ago. I invested in Chainlink back in 2018, 2019. I was actually pretty early in Chainlink, like way before this run up. And, I actually captured this run up pretty well. But yeah, it looks like it's coming back. It looks like Chainlink went from, this whole bear market period. It went from, the low three. It actually, wow, it went back to, okay, no. So it was at like lows, like $5, went all the way up to 12. And then it broke this resistance at 13, 14. Now it's sitting, all the way at 19. For me, well, at this point, all right, like if we look at the market cap is 11 billion. Now this is very important when you're investing, that you look at the market cap, because if you, let's say you wanted to make a double on this investment, the market cap needs to get to 22 billion. Now it's not impossible, but it was way easier from $5 to 10, 15 to double, triple your money if you had the foresight to get in that low. But at this point, I think you're definitely going to get the double, which is going to probably end up breaking its all-time highs. But I think that's going to be later in the bull market. It may be earlier. After the Bitcoin halving, we may get blow off top for Chainlink. But again, it's going to take a lot of volume, a lot of money coming into it to get that double. So just know that. Now, I think it's a short double in my opinion. But again, it's not financial advice. You definitely got to do it. But it is the number one oracle in the blockchain space. I know there's some competitors coming up. So if you wanted to look at a specific sector in the blockchain space, then oracles are definitely something that's going to be needed. Basically, for those of you who don't know what oracles are, they pull data, outside data, like financial news feeds, any type of financial information, like information from the stock exchange. It's just all over. It could pull data from all over, and it brings it into the blockchain, just real live data. So the blockchain, so basically, like Chainlink has oracles of data that it provides to other chains. So, and it's very crucial for some chains to exist. So it definitely plays a important role in the blockchain space, and it's definitely one to look out for. But yeah, again, not financial advice. All right, that was it. I kind of went on a tangent with Chainlink. But yeah, overall, the crypto market is down. All right, next, this is the last thing. So I'll probably just go over what I'm going to do. Like on Mondays, I'll go over the overall stock. What is this? These like ads always come up. It's ridiculous. All right. So yeah, so what I was saying, I'm going to do a market update. So stocks, I'll go over all the major indexes, and then maybe like a specific stock that's just moving a little more than everybody else, which was Meta today. Then obviously go over the crypto market, and then I'll pick a financial news article and just discuss it for a bit. And that's typically what the market Mondays are going to be about. All right. So for this Market Monday, it says this is critical for thriving in retirement. Personal finance expert says. So let's see what they say. It says the Ramsey Show co-host Jade Warshaw revealed the key to thriving, not just surviving your later years, in an interview with the Big Money Show Monday. And I think she says it's so important to make sure that you're planning for your own Social Security by investing on your own. She stressed. All right. It says the expert on the need for diversification. I have it up here, so I don't know why I'm looking down there. The expert hit on the need for diversification for investing in the markets and the utilization of other retirement benefits to maximize financial security in retirement. We suggest investing 15% of your growth monthly income into things like 401ks, Roth IRAs, because Social Security is only going to pay 40% of that. All right. So I wonder if they consider 401ks. Okay, so I guess they consider 401ks investing on your own. So me personally, I think that 15% should be in a separate brokerage account separate from the one at your job. Since your job typically matches that, so at least do the 4%. I'm really not into the 401k, so I would honestly, if you had if you could do a little bit of research on your own and invest on your own, I would recommend that. But if you're looking to work a job for, the next 15 to 30 years, I mean, the 401k is good because it matches. I'm just not a big fan of it. I feel like people can invest on their own. Now, I'm not saying you have to be the expert, but there's index funds, there's ETFs that you can invest in that you don't really have to do much work, and then you can sprinkle like little, stocks here and there to complement your portfolio, right? But yeah, I definitely agree with what she's saying. I think, what is this? This is Fox. Yeah, I agree with this. Agree with what she's saying. I think you should be try to store more than 15%. Now, obviously, this is going to require you to make more money each month, but yeah, you should be putting a good amount away on your own. You should be keeping up with the markets, and because Social Security, you're not going to get much. I know people that get Social Security now; they only get like 1,000 to 1,500. My grandparents only get like 1,000 to 1,500. So it's not a lot of money to depend on going into retirement, especially if you want to do things like vacation and just be, free and do what you want to do. Or at least be able to do some fun stuff. You're going to need more than the Social Security. So I definitely agree with that. See what else they say. Social Security could be cut by 20% as soon as 2034. All right. So everybody that's 10 years from now. I guess they're talking about for the people that are 50 now. But again, if it's cut by 20% now, then for people that are younger than that, probably won't be any left by the time you get there. So, yeah, so it's going to be cut by 20%. A growing number of Americans are struggling to save for the future, with Forbes reporting the median household is 470,000 short of what they need to retire. So, yeah, that sounds about right. All right, and then most people don't have $1,000 saved. Warshaw suggests those who have reached 60 years should be taking Social Security. If they don't need it, invest it until they do. They would get better returns, certainly higher than 2%, she explained. They would get higher than 2% than, I guess, what you would get at the bank. I'm not sure what they're comparing that to. But yeah, you should be investing on your own. There's plenty of brokerages that you could use. I know they've been promoting, like a lot of finance YouTubers been promoting, like the Webull and the Moomoo and the Public. I don't mind using those if those are going to be like, anywhere from like, if you're only going to put like 50K lower. But if you're going to put like some serious money, I would stick to like the big players like Fidelity, Vanguard, maybe a Chase, like the too big to fail companies. I've seen a lot with these overnight apps that come out, especially in the crypto space with like Voyager, was it Curve or Celsius? Like, what else? There was another one that went bankrupt. But yeah, like, If you're gonna, I wouldn't. You could keep a little money on these apps, but I would definitely not put your whole, like, your main portion of your retirement in these apps, because they tend to go bankrupt. I'm not saying they will go bankrupt. I'm just saying from what I saw in the crypto space, it's just, I wouldn't put most of my money in that. But yeah, yeah, that's pretty much it. So we can do this, switch back. But yeah, that's pretty much it for market update. I will be back Wednesday. Hopefully I have another article to talk about. But yeah, thank you guys for watching, and make sure you take care of your financial nutrition. Take care.